Welcome to Focus Economy, your trusted source for global economic insights. In this video, we bring you the key economic developments from the 15th to 22nd of February 2025. Let's get into the top economic news of this week.
Welcome to Focus Economy Weekly Global Economy News. Headlines. India's economy rebounds as budget-driven consumption offsets global headwinds. RBI. India limits EV investments are being charged for tariff relief. Global markets are reacting to policy uncertainty. The UK is facing economic and labor challenges, and Indian equity markets are under pressure. CIE Automotive India reports mixed Q4 results. Global economic growth remains steady. US GDP growth is forecasted at 2.3% for 2025, and India's economic growth is projected between 6.3% and 6.8%. Detailed news follows.
High-frequency indicators suggest a significant and sustained increase in Indian economic activity. This growth is driven by budget-induced consumption despite global uncertainties and rising protectionist tariff. Easing headline inflation and tax relief in the union budget reflect improving rural demand and recovering urban demand, positioning India as the fastest growing major economy. India has introduced a policy to attract foreign automakers, including Tesla, by offering reduced import tariff for electric vehicles manufacturers. However, only 5% of investments in charging infrastructure will count towards the $500 million required for manufacturers to qualify for these incentives. This strategy aims to prioritize vehicle production over the expansion of charging networks. Global markets react to policy uncertainty. Global equity markets experienced mixed performances. US stocks declined due to concerns over President Trump's rapid policy changes, including significant spending cuts and new tariff. Meanwhile, European stocks posted slight gains and Asian markets benefited from strong regional performances. UK faces economic and labor challenges. The UK faces mounting economic pressures. The United Nations has warned of potential strikes by oil workers and tanker drivers to safeguard jobs at risk from the green transition. Additionally, UK companies are cutting jobs at fastest rate since 2020, and public sector requires substantial investment to meet decarbonization targets. Indian equity markets under pressure. Indian equity markets have experienced a 5-month decline with further downturns expected. This downward trend is attributed to slowing corporate earnings growth and the withdrawal of foreign investors as the country's economic momentum decelerates. CEE Automotive India reports for its fourth quarter results. CEE Automotive India reported a 5.82% year-on-year decrease in revenue for the continuous fourth quarter 2025, totaling 2,109 crore. Despite the revenue drop, profit increased by 9.49% every year, reaching 184.94 crores. Global economic growth remains steady. The United Nations projects that global economic growth will remain steady at 2.8% in 2025, consistent with 2024 figures. This forecast suggests resilience in the world economy despite various global challenges. US GDP growth forecasted at 2.3% for 2025. The Conference Board forecast US real GDP growth of 2.3% in 2025 with stronger expansion expected in the first half of the year. India's economic growth projected between 6.3% and 6.8%. India's economy is expected to grow between 6.3% and 6.8% in the 2025-26 fiscal year. These projections factor in the rural recovery and softer inflation, through risks from geopolitical and trade uncertainties persist. Capital market updates. 15 to 22 February 2025. Market performance overview. The US equity markets faced significant downward pressure. The Dow Jones Industrial Average recorded its most substantial weekly decline since October 2024. Concerns over President Trump's rapid policy changes, including major spending cuts and new tariffs, led to investor unease. The S&P 500, Dow Jones and Nasdaq all closed lower with notable losses in industrial, consumer, technology and energy sectors. European markets showed resilience despite ongoing volatility. The Stoxx 600 achieved a slight weekly gain, outperforming US markets as investors shifted focus to Europe amid uncertainty surrounding Germany's upcoming election. Asian markets performed well and robust regional gains. The MSCI Asia Pacific Index, excluding Japan, posted substantial increases, indicating positive investor sentiment across the region. Then let us see the key influencing factors. Geopolitical tensions. Rising tensions between the US and transatlantic allies over the Ukraine conflict continue to disturb global alliances. Despite these issues, US stocks reached record highs, though investors are increasingly seeking safer assets like European investment and gold. Policy changes. President Trump's imposition of new tariffs on pharmaceuticals, semiconductor chips, and wood has heightened fears of a trade war, contributing to increased market volatility. Investors' behavior. Despite the challenging environment, investor sentiment remains optimistic. However, an increased interest in safer investment such as gold and European assets suggests underlying caution. Capital market forecasting. Analysts warn that markets may face heightened volatility in the coming weeks. Goldman Sachs highlights potential disruptions in the options market with approximately $2.7 trillion in US stock market derivatives set to expire soon. If investors do not renew these options, it could trigger a major set-off, increasing market pressure. Additionally, the Federal Reserve has signaled potential future interest rate cuts due to cooling US inflation. While such cuts may provide temporary market support, opinions remain divided and investors are advised to monitor key economic indicators closely. In conclusion, while global capital market exhibits resilience despite geopolitical and policy uncertainties, upcoming weeks may present increased risks. Investors are encouraged to diversify portfolios and stay vigilant. That concludes this week's global economic news. If you found this update valuable, please like, share and subscribe to Focus Economy for more insights. Share your thoughts in the comments below. How do you think these developments will impact the global economy? Until next week, stay informed and stay ahead. Thank you.